Hello, small business owners, and welcome back to another episode of the Small Business Tax Savings Podcast. My name is Mike Jesowshek. I'm a CPA and founder over at JETRO, which is a digital accounting firm servicing small businesses across the country, helping them with bookkeeping, taxes, and payroll. Now, 3 weeks ago, we touched on both traditional and Roth IRA options for individuals. Last week, we touched on the SEP IRA and solo 401k for those businesses, for those employers with 0 or few employees. Now, today, I want to discuss retirement options for those businesses with employees. And really, there are 2 main plans I want to discuss, and that is the Simple IRA and the 401k. The first one I want to talk about is the Simple IRA. A Simple IRA is a retirement plan for businesses to offer tax-deferred retirement savings for their employees. If you have a Simple IRA, you cannot have more than 100 employees who received $5,000 or more in compensation the prior year. If an employer is offering a Simple, they are not allowed to maintain any other retirement plan for their employees. Any employee who is expected to earn $5,000 or more, you must allow to participate in that plan. And as an employer, you really have 2 contribution options with a Simple IRA. The first one is matching contributions. And basically how this works is that you match up to 3% of the employee's contribution. If the employee does not make a contribution, you would not, as an employer, have to make a contribution for that employee. This is simply a match of up to 3%. So for example, if an employee elects to contribute 2%, you would match that 2%. If the employee chooses to contribute 5%, you would match 3%. And again, if an employee chooses not to make a contribution, you as the employer would also not make one either. Now, the second option is non-elective contributions. And instead of matching contributions, you choose to make non-elective contributions of 2% of each eligible employee's compensation. So if an employer chooses this option, they must make the 2% contribution whether or not the employee chooses to make contributions themselves. So if the employee chooses to contribute 3%, you would just contribute the 2%. But if an employee chooses to not make a contribution, you would still be required to contribute 2% as the employer. So again, with the Simple, there's 2 options. The matching contributions, which is you match up to 3%, or the non-elective, where you contribute 2% no matter what. Now, the amount an employee contributes from their salary to a Simple IRA cannot exceed $13,000 in 2019. Participants who are over the age of 50 are allowed to make catch-up contributions up to an additional $3,000. With a Simple IRA, there is no Roth option, so that's one downside, but they are fairly easy to set up and maintain, which is why they are especially so attractive for a relatively smaller business. Now, let's talk about the 401k. This is a retirement plan that you have likely heard about the most. Just about every major company you can think of has some type of 401k plan. These plans are really nice for bigger companies, but oftentimes as a relatively small company with, say, 5 to 15 employees, it may be overkill. There are all sorts of configurations when it comes to a 401k, so I don't want to get into the details too much, but I do want to talk about some of the high-end items. The max employee deferral for 2019 is $19,000 with an additional catch-up contribution for those 50 or over of $6,000. Many of these 401k plans do have the option to offer a Roth option. The employer contribution is optional, and each plan would be set up differently, so you have to talk with your plan provider about how you want to set up that contribution match. The fees around setting up and maintaining a 401k are generally more expensive than other IRA plans. There is also a lot more paperwork and testing that needs to be done on a regular basis with a 401k. Now, this is not to say that a 401k is a bad retirement vehicle for your employees. I just want to make sure that you are aware of the complexities around it. When it comes down to retirement planning, every business has different employee makeup, needs, budgets, etc. So there really is no one perfect plan for every business. That's why I highly suggest you take what we discuss here and talk with a financial advisor about your situation to really find what that perfect fit is for your business. If you do need an introduction to a financial advisor, let me know. I have a great relationship with one who works with clients all around the country that can really talk through these options with you and nail down which option specifically for you is right. And so now I just want to go back and just give a quick overview of these two options. With the Simple IRA, if you have more than 100 employees, it's no longer an option for you. But with a Simple, you have two options on how you can set it up. You can set up with matching contributions where you match up to 3% of the employee's contributions. So whatever the employee contributes, you match it up to 3%. The second option is non-elective contributions, and this is where you contribute 2% no matter what the employee does. So if the employee contributes 1, 2, 3%, you contribute 2. If the employee contributes nothing, you still contribute 2. So those are the two options with the Simple IRA. Now the max that employee can contribute to a Simple is $13,000 in 2019. And the Simple IRA, again, some of the advantages are it's fairly easy to set up and maintain, which is why it can be pretty attractive. Now with the 401k, the downside is that it can be more expensive, and there's also a lot of testing and other paperwork that's involved with it. But one upside is that you can contribute more to it. So instead of that $13,000 with a Simple IRA, with a 401k, you're allowed $19,000. So those are some of the main differences between a Simple and a 401k. Generally, for those larger businesses, 401k is likely going to be your option because they're very flexible. You can customize it to your needs and put in a lot of different features within the plan. With a Simple, it's pretty cut and dry. You pick one of your two options, and that's it. There's not much maneuvering or changing of the plan that you can do. So again, take what we discuss here, talk with a financial advisor about your specific situation, your specific business, and see what makes sense the most for you. Now, I want to just appreciate and I thank you guys for listening to another episode. And just a reminder, we have a website to check out. We have you can go on there to see our most recent episode, find some extra items, learn about our Facebook group, find information on our free program for bookkeeping, payroll, and tax strategies, as well as even do a free 15-minute consultation if you want. And you can find that podcast website at www.taxsavings.com. You can also join our Facebook group simply by searching in Facebook for Small Business Tax Secrets. That's Small Business Tax Secrets. And there should be a group that pops up. Answer 3 questions, and then we'll allow you in the group. Again, I just ask that if you enjoy our weekly episodes, please leave a review on whatever platform you may listen to us on and share with other business owners. Our goal is to share valuable tips and tricks to small businesses around the country. If there is a topic that you want us to touch on specifically, shoot me an email and we can put in our schedule. Again, thank you for tuning in to another episode of the Small Business Tax Savings Podcast, and I will see you next week.